All right, welcome everybody. Welcome to Talkin Investing. You are here with Tom and George. We're going to go through what happened today. We're going to go through what happened this week. We got a lot of things going on geopolitically. We've got a lot of things going on in the Bitcoin sector, in the AI sector. We got a lot of data this week. We got our GDP. We got CPI. So our slate is full today. Where is my... Well, I would ask you to press the like button, but my thing isn't working. So press the like button for us if you could. My button's not working. I might have to get tech support in a few minutes. Not a big deal.
Let me take over.
Take over. Go, George.
Guys,
go.
We got a lot of information going on. Bitcoin is starting to move. Was ABTC a scam? I don't know. That to come up. And then what's up with Bitfarm? Who has Bitfarm? Is it dead? Hive could be the next big adventure. And then also IREN. Great news about IREN coming up. You're going to want to stay around for that. But finally, some movement with Marathon. I didn't even look, but I bet you there was some great movement.
We're going to talk about the movement on Marathon because it is just, you can't make this stuff up. And we talked about it on the members only. So we're going to follow up right now. I got to plug something in. And it's more, to me, it's more market manipulation. Whoa, that's some high intensity light. I'm trying to get my lighting right.
Uh-oh. So let's see the result of the poll. Let's see if I can find it. I put in information. Is Bitcoin about ready to take off, or is this the beginning, or is this a dead cat bounce, or is it going to go back down? Let's see what you guys said. Got to get to the voting.
Got a poll going?
Yeah, I had one during the day.
Meanwhile, I'm in
Tell everybody we were
trying to work on my strobe light.
I'm not affiliated with him.
Oh, and the camera moved. Everything's all... I don't know what... Somebody invaded my space.
I'm not affiliated with him. Just so you know.
All right.
Okay, posts. Here we go. Posts. We got 50% of the people voted saying, yes, it's going up. But 6% said, what is a Bitcoin?
Uh-oh. See, that's good. The bigger that number, the better.
18% said dead cat bounce, and 26% said no going down. So if you break that all together, I mean, that's 50-50. It's a 50-50.
It's once again.
Yeah, we're down the middle.
But that's where we are. That's not a coincidence. The market is confused. These are confusing times, and there's a lot of major things playing out that forget being done, that some of them really haven't necessarily even started playing out. All right. So, you know, there's a lot of uncertainty right now, but is that uncertainty going to last forever, or is it going to be the opportunity that we're going to look back and go, boy, was that obvious? So I'm going to tell you my thoughts. Dan, thank you very much for the super chat. Dan said, Mara, year-end target, ? Why it went up today, ? So I'll, you know, let's take, I think I have the Marathon chart open here somewhere. Yes. Okay. So you're going to see, you know, it's been trading for a little while. This line has support. It did close one day under this, and that's at about $7.20. And that is crazy, crazy, stupid low. I never thought Marathon would get to this number, but it did. And now here's this line, which really was set up as a line of support. You know, you can see right here, did, as it often does, you know, today... last week it was resistance. Today it was resistance. So, you know, Marathon this morning was off to the races. It still was the winner by far on the day, up over 6%, but it was up double that earlier in the day. And And here I'm going to tell you why I think that is. And it's really simple and it's really stupid. But we did talk about this on the member stream, so I'm not pulling this out after the fact. I called this out when it happened. Here. This was on March 10th, Tuesday. Mara holding target lowered to $9 at Clear Street amid mining challenges. So what does that mean? On March 4th, Clear Street lowered the firm's price target on Mara from $16 down to $9. Now, it was trading plus or minus $8 when you go back to the chart. It was hanging around at $8 to $8.50. And so instead of a double at 16 being their price target, they said basically where it is, that's it. That's all you're going to get for the next year. And to me, every time I see one of these that doesn't make sense, I just ask the question, what was the motivation? What happened on Tuesday where somebody woke up and said, you know what? My thesis on Marathon has drastically changed. Yesterday, I thought it was going to double. Today, I think it's not going anywhere from this day forward.
Okay, yep, I'm with you.
So,
yeah, I agree. Yep, it did change.
I predicted that this basically was a gigantic buying signal. And I'm not going to try and get inside of this person's brain or put, speak on their behalf, but all I can tell you is seems to be a correlation between downgrades and stock runs. So now there's two different types of stock downgrades. This was a downgrade on a Tuesday where nothing happened. If something happens, if financials come out, if an event occurs, if the narrative has changed and somebody comes out and said, ABC happened, and so for that reason, I thought Marathon was going to be at $16, but, now all of a sudden they've got this roadblock and they just came out and said, you know what, Marathon sucks. Pardon my language. It's not $16, it's $9. So I am always ultra suspicious of those moves. And wouldn't you know, the next thing that was this week. And Marathon got to $10 today. So they put a 1-year price target to get to 9, and it got to 10 2 days later. So you guys tell me.
What do you want me to tell you?
What?
The management sucks?
So that's the first half of my answer to this question is, and I'm sure, that data point doesn't exist alone in a vacuum, but I think that was a big signal that we were going to get a jump.
Hang on, that the CEO gets compensated too much? What do you want to hear?
George, I'm getting a sense you're not a big fan of Marathon.
I have never lost more money on a company in my life. Marathon.
Marathon's the worst position in my portfolio. So yeah. I can't argue that point. It's a fact.
They don't communicate well. Their optics are terrible. I almost feel like they do it on purpose, personally.
I don't know. I'm not going to sit here and say they manipulate their own stock price, but I don't know. I don't know what everybody's motive is. All I know is that when I look at Marathon's balance sheet, when I look at their Bitcoin holdings, when I look at my own personal forecast for where I think Bitcoin is going in the next 1 year, 2 years, 5 years, 10 years, and the fact that Marathon finally, at long last, and they got no bump on this, they actually got a dump. They were the last holdout. They picked an extremely competent partner, And they're doing a joint venture to get into high performance computing, which at this point is basically a must for these Bitcoin miners, is to diversify their revenue streams. If you'd asked me that a year ago, I would not have given you the same answer, but it is now a year later. This has proven itself out. Gigantic multi-billion dollar contracts have hit multiple of the stocks we've been following. And those stocks are thriving, and those contracts have only just begun to roll in. Marathon was not open to that until recently. So they opened that door. They're still the kind of tied for biggest, maybe second biggest Bitcoin miner by exahash. And they have more Bitcoin on their balance sheet than all the other publicly traded Bitcoin miners in the whole world all added up put together. So by far the most Bitcoin. So tell me where, that this is why I believe Marathon's going up. Now you can say, well, they stink. So they're not going up because they stink. And my point is, and it has been, and I've tried to repeat this simple message. Maybe Marathon's not an A student.
No.
Okay.
Yeah.
So maybe perhaps we all agree on that. Let's say for the sake of argument.
We should come up with a name for an acronym with Marathon. I mean, MARA.
My question is, can they be a C minus?
And still make money.
If they are a C minus, then my price target is at least a double this year. Now, it's not financial advice. I don't know what else happens this year. There's a lot going on in the world, but it's my opinion based on what Marathon has, the assets they have, and what I think Bitcoin's going to do. If they operate at a C minus level from an operational standpoint, which is not good, right? That's bad. If I was the chairman of the board and my CEO was getting a C minus, they'd get a short period of time on notice and then they'd be fired. So I'm not saying that's good performance. I'm saying that's how low the bar is in my mind for this stock to double. That's my opinion. We can do
I put up a poll already, Tom. I put down Marathon a buy right now. I put yes, no, yes up 25%, which no one said yes to that one. No, down 10% from here. And what's interesting is but it looks like the yeses are starting to pull away. That's a good buy right now.
I just don't see how you can look at this company unless you think
I have 3 letters that can tell you why it's not a good investment right now.
Go ahead.
ATM. They go with ATM. They start to see the movement of the stock going up, and they go, "Oh, I need to go to the ATM," and they need to do right.
Every
time.
This was a big problem for all the Bitcoin miners in late 2023, 2020, early 2024. The at-the-market offerings were spiraling. And Marathon was right in there with them. And they've got some debt. But I do think you're going to see a lot more convertible debt or traditional debt from these companies on a going forward basis than just massive stock dilution when their stock is, I'm going to zoom out a little. This stock is hammered right now. Just decimated, right? I mean, I can't.
What's the short interest on it? Do you know what it is?
I would have to go check, but I know it's been as high as 30%.
Right.
In recent times. So if somebody wants to look that up and drop it in the chat while I show you guys the chart, it's typically the most shorted stock out of all the Bitcoin miners. There's 2 or 3 that are heavily shorted. So I can tell you right now, whatever it is, there's a gigantic short interest in this. And look, this just goes back. So if you go back to October of 2025, from where we are right now, Marathon would have to go up almost 150% to get to where it was in October. Now, are they a better company today or a worse company today? There is one difference. Bitcoin was high in October and Bitcoin is low right now. So if you think Bitcoin's going to stay low for the next year, then you might be in the camp that says Marathon's not going to double or triple or more. But they got to move up 150% just to get back to where they were before they were in AI, before any of that. To get back to where they were in November of 2024, that's 221%. That's their peak. Oh, sorry. No, I jumped the gun. That's not their peak from this cycle. Their peak in this cycle, right, post-halving, this might have been just pre-halving, but this is this 4-year cycle. In February 28th, 2024, this was a $34 stock. They have to go up over almost 260% to get back to that. That is not to get back to all-time highs, because here, I'm going to go to the 3-day time frame just so that we can see it. All-time highs were up here at $83. So I don't even have that on my list. Right? 9 times 9 is 81. It would have to 9x, more than 9x to get back to this. So I'm not even shooting for this. Well, guess what? When Bitcoin was $65,000 back in 2021, this was almost a $60 stock. I'm not even talking about getting back to that. I'm talking about getting back to 18, 24, 27, maybe 30, where it has been recently. So that's still, I'm still talking about this stock peaking, down almost 65%. I don't think that's an unrealistic expectation. But I understand this is least favored status, if you will, of probably any of the Bitcoin mining stocks right now. This stock's been getting hammered since that peak. It's just been getting destroyed. And for this to be down in the 7s and the 8s and the 9s, it did hit 10 today, but it closed at $9.32, so which was up, almost 6.5%, which is a good day, but that still leaves it at, in the 9s. That's my thought. So it's getting pretty close on this one, George.
Yeah, I mean, I thought it would be an interesting one to start off with, because look, it used to be, like you said, the gold standard of Bitcoin mining. And these guys have just done everything wrong, from the way, I'll never forget when I found out they didn't own anything and they leased everything out. I was just like, what?
Well, they were loud and proud about that. They were asset light. That was their motto. But that was a long time ago. They picked the wrong strategy. They had to completely reverse that. There was a moment in time, and it was 5 or 6 years ago now, where the number one bottleneck in Bitcoin mining was getting Bitcoin mining machines. Period. And Marathon was out ahead of everybody on ordering Bitcoin mining machines. But very quickly, that bottleneck unwound. And, within a year and a half, it was evident it's not about Bitcoin mining machines. This is about highly efficient energy and data centers. So even if they're staying in the Bitcoin world, these still need to be, great data center companies. They need to be vertically integrated, have their own infrastructure, have their own power purchase agreements. And so there were companies that were already, that was their model already. Marathon in 2022, I'm going to zoom back out. This is September of 2023. And it may have even been this late. And here they got this stock got down to from $83. This stock got down to $3. Now that was at the absolute FTX bottom of the crypto winter. But prior to that, there was a month where they mined about 60 or 70 Bitcoin. Their operations almost completely shut down. And it's when they were talking about they were 8 or 10 months into talking about, being at, I think it was 13 exahash or 15 exahash, and they got all the way down to 1 exahash. They spent a full 12 months operating extremely poorly. From that, they recovered from $3 to $34. That's an 11x. That's 1,100% increase they had after they were the worst company on earth. So we've been right here at this exact spot before with this company. And I think that this is their standard operating procedure. They're late. They picked the wrong strategy. Everybody else already switched. They have now switched strategies. They're doing it in a joint venture with, I think, a competent partner. They still have, one thing they still have is more Bitcoin by far than anybody else and an extremely healthy balance sheet. So this company's not going anywhere. If you don't like them, they're not going away. Their balance sheet is too strong. Though they could go, if Bitcoin fails, then they'll go away. But
well, let me give you got all that good news. Let me give you some negative news.
Go ahead, George. Flip side of the coin.
Fourth quarter, $1.7 billion loss. That also includes a compensation to the CEO of around $34 million.
Yes, they're well compensated, no question.
It's good to have friends in high places. Driven by but it was driven by a 1.5 decrease in the price billion from the price of Bitcoin stock. You know what I mean? Right.
So remember, that's all of that's on paper. That's
20. I know it's a paper loss. It still cuts when you get on the edges.
Absolutely.
2027, there's a few notes too, almost $2 billion. They decreased by 19% the number of Bitcoin mined because they said of difficulty, which I find that interesting.
Well, and that's happening to everybody. Everybody who isn't actively growing their exahash. So let me quickly go, and we're about to get a good difficulty adjustment, but let me show you what's going on there just to interject for a second, and that is not it. So if you look, I'm going to go up the ladder here and go to a 1 year. This was at 110 trillion. 110 trillion what? I don't know. It was at 110 trillion. It got up to, this is the difficulty level on the Bitcoin network. In November, it got up to almost 156 trillion. Now, we did have one giant dip down that immediately reversed back up. We're at 144 trillion. If you go out even further, you'll see despite the fact that, Bitcoin in this period of time is, cut in half, we're still significantly above where the difficulty level was when Bitcoin was at all-time highs. So the economics of Bitcoin mining has been brutal, and the Bitcoin miners with the same amount of exahash, they're mining less Bitcoin right now. That's supposed to be okay because Bitcoin's supposed to go up in price. But when we have these pullbacks, the economics aren't great. Everybody, not everybody, but Marathon and almost all of the Bitcoin miners over a year ago stopped buying Bitcoin mining machines, stopped growing their exahash. They got to where they're going. And I have said over and over, I think that was the exact right thing to do because, once again, build out your infrastructure, build out your power, build out your data centers. And then when the time comes for the next halving, when the machines are twice as efficient as they are now, or 3 times as efficient as they are now, then go buy your Bitcoin mining machines. Don't buy them now so you got to throw them in the garbage at the next halving. So that there is some validity to what they're saying there, and everybody's experienced that, other than there's a few companies that Hive is ramping up. They ramped up their amount of exahash substantially, and BitDeer is now the biggest miner. So they went from 8th or 9th or 10th biggest to, from an exahash standpoint, they are now even bigger than Marathon is. However, they make their own machines. So they're vertically integrated at a level even beyond where everyone else is vertically integrated. Pardon the interruption. Go ahead, George.
So energy costs rose 54% for electricity to $48,611 per Bitcoin. Can you imagine that? That's unfathomable. That much money for just the energy costs.
It's insane to mine one Bitcoin, but that's within plus or minus much less than one standard deviation from the average cost of the publicly traded Bitcoin miners. It is a little higher than average, but that it's just a lot of money to mine a Bitcoin now. But even with that cost, I mean, we're at Bitcoin 71,000, and this is Bitcoin getting hammered. We were at Bitcoin 120,000. You don't mind so much that it's $45,000 to mine a Bitcoin, because remember, energy is the majority of their cost, the vast majority.
The vast majority. That's really all I have.
So, I mean, those are tough numbers, and I know it's not. And again, I'm not. My investment thesis is not that Marathon is going to perform at an A level or an A plus level as a company for the next 12 months, because I don't think that's realistic. Could they be a B? I don't know. Could they be a C? But I mean, that's a pretty low bar. Can they be a C minus? That's what I estimate they need to be. That's my opinion. If they can be a C minus, which is the very definition of mediocre, if they can be mediocre, I think they should double or triple. That's my opinion.
Just so you know, the short interest is just a little bit over 30%.
Astronomical. So at some point, with that many Bitcoin on their balance sheet, at some point, the institutions are going to rotate back into this, and they will have made their money shorting it, and they're going to turn around and make their money running it back up. That's what these stocks do. This is, remember, if there's one thing we have repeated to more than anything else by a mile, these are the most volatile stocks. This is maximum volatility. You're going to get gigantic moves to the upside and gigantic moves to the downside. Sometimes you'll get those in back-to-back days, right? You can be real excited that your stock was up 18% today, but watch out, because it could be down 15 or 20% tomorrow, even though nothing happened either one of those days.
Or an ATM happened.
Well, if heaven forbid something happens, then your stock can really get crushed.
So so 60% of the people agree with you, Tom. Marathon is a buy right now.
I feel like it's a buy. So that's pretty close. It's still a split decision, but now, having said that, I'm not buying any more of it, because I dollar cost averaged. I do have one more stock I'm dollar cost averaging into on this list, and I am continuing to buy XRP on the dip. The stock that I continue to dollar cost average into is BitDeer. Because if there's two stocks that have been unreasonably beat up for the last 18 months, it's Marathon and BitDeer. And unlike Marathon, I think BitDeer does perform at an A level. And they are priced as an F. At $7.50, we will go through what that represents over the last couple of years. But they are being priced as an F. And I can't find any justification on calling that company an F. I think you would have a very difficult time defending the position that they're a C. to me they're an easily a B, if not an A. So what is that? In my opinion, that's a buying opportunity. So I'm still buying it. Marathon, I've bought more Marathon than any other stock. Now it's not even close to my biggest position because it's tanked. So while my share count is really high, the value is low versus an IREN where I made one purchase of IREN. I never bought any more again. I made two. I made one several years ago, sold it in the middle, and then was very, very fortunate to get back in. It dipped all the way back down to $6. So I made a big trade. I went in heavy on that, and it's at $41 right now. So I'm in at $6. I'm not dollar cost averaging in at 41, even though in my opinion, it's a bargain at $41. This did get over $70. So that was kind of a foreshadowing, a little bit of an overshoot when it happened. But I do think this will climb its way back up. This is one of those companies that has already gotten a multi-billion-dollar contract. Here, let me just take a look. I'll show you. So total secured power, greater than 4.5 gigawatts. Now, understand those are all at various stages. Some of those gigawatts are up, running. They have data centers in them. They have machines in them, etc. Some of them are at, earlier than that. They're being built. Some of them, they just have power purchase agreements and an agreement to buy the land, or they've purchased the land, haven't done anything. But that 4.5 gigawatt pipeline, that's the biggest one out of all of these companies, with the exception of Hut 8, and I'm going to talk about them later because I cry foul on the number that they claim, and I'll show you what I mean by that. So this is 4.5 gigawatts, and you can see with just 460 megawatts, so that's 1/10 their capacity, they're expecting a run rate, and they've updated this. This is about 2 months old. They updated this. It's now $3.6 billion annual run rate, just with 460 megawatts. Well, they've got 10 times that much available. So you're talking about a company that could 2 or 3 or maybe 4 years from now have 30, maybe 30 or 40 or billion dollars of revenue, maybe more. So when you look at the company that way, its market cap of what's 12 or 13 billion right now, you can see there's monumental upside to this company, in my opinion. And I'm not just, this is not the only one. There's a lot of companies that are following this, this line of, oh, by the way, they got 50 exahash built out of Bitcoin mining. And should Bitcoin go on a tear, they can turn all of that on. I don't know how much of it's on. They stopped doing monthly operational reports. I suspect a lot of it's on, but not all of it. But at any given moment, they could be back at 50 exahash, which makes them one of the largest Bitcoin miners on top of all of this. That $3.6 billion run rate that's not any of the Bitcoin. That's just their high performance computing data centers. So I feel like IREN, again, I'm not going to buy, just because I'm not going to buy into it. I was very fortunate and got in at $6. So I'll just take that ride. And I did not sell it at 75. I'm holding it, and I'm not crying about it because it's still.
I told him to do a covered call. Is that covered?
You literally, the day that IREN hit its all-time high, you told me to do covered calls.
$90. Yeah, $90.
Yeah, it was
paying stupid money too, guys.
Yeah, with a big premiums built in.
You were gonna, but I remember you were like, because you wanted to sell some of it, but you know what I mean?
At one point, I had a stop loss in at $14. So I'm thankful it never got down to that, because it went from 6 to 17 in like 2 weeks. And I'm thinking, I'm kind of greedy at this point. So I did put a stop loss in for a short period of time, and then it just ran up so high. I was like, at this point, I'm just holding it. And I know a lot of you guys were in on IREN before I was. And so I know a lot of people have made money on IREN. I know a lot of people have made money on TeraWolf, CIFR. Some of these companies have done very well. Marathon's more of the outlier. They're doing very poorly.
Want to go out, buddy? Want to go out? Come on, let's go out.
CleanSpark, to me, is underperforming wildly. They were second last to the what's being called the AI, but it's really the data center energy trade. So I did not sell the top, if you're asking me. No, I did not sell the top. And I'm okay with that because I'm holding these. They're all, at this point now, it's coming up on a year. By the time I sell them, it will be more than a year. And I think that I will sell it for more than the 70-something dollars it was at when I was talking about it. So if I'm wrong, then it won't be the first time. And it won't be the last time. If you just got here, my button doesn't work, but if you guys could please smash the like button, it does help us out in real time a lot. We've been super low on likes. I don't know if everybody's just kind of bummed out about Bitcoin and the status of the world or what's going on, but if you'd be so kind, it does help us out a lot, and it is appreciated. Just reading a few comments. Gambit Beer, I sold most of my hut above 80 Canadian dollars. So that was that's selling the top. And everybody has to have their own, plan. And there's nothing wrong with a plan that includes healthy profit taking when you've had massive runs up. I mean, if I go look at, if I switch this over to HUT, look at this run. Right, so I don't know when Gambit Beer got in, but even if you dollar cost averaged in, this thing was down around this $8 between, $8 and $11, there was a lot of opportunities. So even if you were in, if you did hit just this spot and sold here, that's 530% increase HUT had in from April 4th, 2025 until January 21st, 2026, just 3/4 of a year. It was up 500%. Right? So that rivals, I mean, if you look at IREN, IREN was up 1,295% from April 9th, which is the day after I bought it, until October 27th. I mean, that's crazy. So yeah, you know what? It's pulled back now. Now it's only up 650%. I'll take it. And I didn't get it at $5.50. I got it at like $6.13 or something like that. But to me, you can see it's consolidating around 40 and it's run up to 76. So I think there's a lot more room to run, in my opinion, on this one. Let's get to some of the news because we got a lot of data. So we need to at least talk about it. I'm going to start with the bad news. U.S. economy expanded at a sluggish 0.7% in the fourth quarter. The government says, and downgrades first quarter 2026 estimate. The U.S. economy has shown resilience in the face of President Donald Trump policies, but the war with Iran has driven up oil and gas prices and clouded the economic outlook. So that has to do with their forecast. It has nothing to do with what happened in the fourth quarter because that all already happened. The U.S. economy hobbled last fall. Remember, there was the longest government shutdown in history. So a part of this low number was the government shutdown. However, even with that, they estimated it was going to drop to 1.4%. But it dropped even worse than that to 0.7%. So just as a reminder, and I don't even know that this definition holds true anymore, but 2 consecutive quarters of negative GDP used to be the official definition of a recession. So technically, this quarter does not count. We were plus 0.7, but that's very sluggish is the right word. That's just not a good quarter. They don't think this is going to be a great quarter. So we will probably have 2 very disappointing quarters. They just likely won't be 2 negative quarters. But for anybody watching, I can tell you, George, on our first live stream of the year and our last stream of the previous year, made a very, very definitive, bold prediction that the first half of 2026 was going to be a tale of 2 years. The first half of this year was going to stink, and the second half of this year was going to run. I don't know if that's where you still are, George. You can update us.
I still am there, but man, I didn't know it was going to stink as bad as it stinks.
Well, there's a difference between knowing it and living it. And that's,
it just, I don't know about anybody else, but man, it stinks.
It's brutal.
I was looking at meat at Publix grocery store. It's going to buy a steak.
Oh, yeah.
I was in shock.
Forget it.
I was just like, what? Are you out of your ever-loving mind? $35 for like a pound and a half of steaks? I'm sorry, that was crazy. Yeah, I know, George was right again. I didn't want to be right, but it's turning, this is what I said to Tom before. The reason we were a little late with the stream is I went on a tyrant. We decided we're not talking about the war, but I went on a tyrant about, I think we're staring down at a cliff, and I don't know if we're going to fall off that cliff or we're going to start climbing a mountain again. And it's just, that's the only thing,
We're in, right. I mean, we're not going to do the deep dive on this, but it's fair to say right now we're in the middle of it.
Yeah.
And so this is maximum uncertainty as it goes. And it depends minute to minute, which station you're watching, which newspaper you're reading, what happened yesterday versus today. Are things going very well? Is this a disaster? Is this going to be a short thing that ends in 4 to 6 weeks, or is this it never ceases to amaze me. Before we hit the 2-week mark in a conflict, people start invoking 2 things: quagmire and Vietnam. So I just feel like we are at a very uncertain point, but it's a little early to start talking about being in a quagmire when you're just coming up on the 2-week point.
What is a quagmire?
So
I'm sorry.
A quagmire is basically something that you're tangled up in that you can't get out of. There's no way to unwind it, and it goes on and on and on. And that is what people basically called the Vietnam War. That's
being pregnant. You can't be a little bit pregnant. You know what I mean?
We're going to find out. Yes, we're not going to find out that. We know that. But we're going to find out which way, if 4 weeks from now, here's the bottom line. And you've probably heard this 1,000 times, and and we really did not want to talk the whole stream about this, and we won't. But they need to clear a path in the Strait of Hormuz and get tankers moving. So it's not going to happen today, and that's not going to happen tomorrow. But if they can clear a lane sometime in the next, hopefully 2 weeks, at worst 4 weeks, and the movement of goods, mainly oil, but a lot of other things. And if we're back in something that resembles the normal flow, everybody's going to feel very differently about where we're at. If we can't, and that thing is shut down for 3 months, 6 months, longer, that's a quagmire. That's the fear right now. Because we're in the middle of it, we don't know when the end is. And the market's going to price that in. Having said that, the S&P 500 is 5% off of its all-time high. That's pricing in the fact that we're in the middle of a war and have uncertainty. Oil's at or near $100 a barrel. So there's a little more optimism out there with big money than there is with retail investors who are, I think, a lot more afraid right now. And I get it. I mean, nobody can sit here and definitively say, well, here's where this thing's going to be at 2 weeks from now. Here's where it's going to be at 6 weeks from now. We don't know. We're going to have to wait and see.
We are going to have to wait and see, Tom.
Right. So all we can do is wait and see. I do think, unless you think it's going to last forever, I think that pullbacks are a buying opportunity. That's my opinion. So we will see.
What did they say about opinions, Tom? Something about buttholes?
Opinions, everybody's got one. Doug is telling you better buy those steaks. Next year, they're going to be $70.
Well, you know what? Here's what's really sad, guys. I knew this was coming. This isn't any surprise to me. I tried to buy 150 acres of land, and that's what surprised me is how much land went up. I made offers on stuff. I thought I had something purchased, and then I just tried to buy cow. It just the whole thing. It's such a racket. It's so insane. I mean, the price of cows it's just unbelievable. They're so expensive.
There's a bunch of things that have been hit in particular. And even beyond that, just overall, it's just I mean, all of a sudden it's the number one topic of conversation, but I have personally on this channel been saying for 3 years, going to the grocery store is a nightmare.
Yeah.
Like, this is not a new, sorry, I'm messing with my lights.
Well,
this is not a new phenomenon. Tom. We're years into this.
Well, and one of the things I was looking forward to with this administration is to fix that problem. And I don't know if that problem's ever going to get fixed.
Well, this is the hard part. To do what people wanted, which is to get back to the old prices, requires a period of deflation. And that's just not how it works. It's not coming. The best we can do is slow inflation down to, the Fed has that target rate of 2%. Now, we have been lower than 2%, and there have been months in the history of time where we've had deflation, but it is not the normal state of things. It's not a healthy state of things. Having said that, there's particular items, to your point, George. Beef needs to come down. We do need deflation in beef.
Eggs, you can still put eggs there too.
Right, eggs. There's a handful of things listen, they're overpriced. We need a correction. So
I think you can do that with a lot of stuff, Tom. I mean, and I guess what really sucks is that's the stuff that, really affects the middle, the poor, obviously, but it affects everybody.
It affects everybody, but it certainly affects, if there is a middle class anymore, it affects the middle class. It affects, anybody who doesn't have, throwing around money feels it. And even if they do, I mean, I can tell you, everybody, I've gone out to dinner with some, I live somewhere where there's a lot of wealthy people. It just is what it is. And I'll tell you, even those people that never blink, the prices at restaurants have their attention right now. Not that they're not going to buy it, and not that it matters to them. They could buy those dinners 1,000 times over and burn the money, and it wouldn't matter. But it's still grabbing their attention because it's just shocking.
Tom, you're in a small business, and I know that even you, how is your forecast of your business looking?
I mean, running a small business in this country right now is like, it's just brutal. It's just brutal. That's a part of the overall problem. And there's so many forces against that. And you can see the consolidation of wealth. And I'm a free market person. Having said that, I did not imagine that we'd be living in a day where there was $4 trillion market cap companies. And, all of these exchanges are trading at numbers. I'll give you a for instance. If you go to the Dow's trading at $46,000 $46,558. In the housing crisis, when the market crashed, right? Remember, we had all the subprime mortgages and we had a massive crash. The Dow got down to $6,700. It was over $14,000 at the time. We're now at $46,000. The stock market's on a 20-year run that's unbelievable. And here we sit in the middle of massive uncertainty. The fear index, here, I'll go to the overall markets fear and greed index, refresh. You're going to see, wait for it, we are in extreme fear. And yet we sit 5% away from the all-time high for the stock market. Why? Because we have 7 companies that are worth $2 billion, $3 billion, $4 billion. One almost got up to $5 billion, I think. And, it's like it's the concentration of wealth is real, and it's got to, I'm not going to say it's a net zero sum game, but,
a quagmire.
There's winners and losers, and we sure don't feel like the winners right now.
So, Tom, what's another good poll?
We got to do our standard procedure. Where's Bitcoin going? And I will tell you, while George is putting that poll together, I remain confident in my call that this was the bottom. Back on February 6th, and it was really February 5th was the devastating crash. This was from a dollar standpoint, the biggest red candle in the history of Bitcoin. Right from the top, this went from the top of this was 72,999. So 73,000. And the bottom of this was 62,181. That's almost $11,000 daily candle. Never seen it before. Hope we don't ever see it again. Red. Never many green of those as we want. But the next day, we got down to $60,001.00. From there, we actually hit a high of 71,700, closed at 70,000. So, we had an $11,000 candle down. We actually candle wicked even lower and ended back up. We still didn't get back to zero, but you can see I think this is the biggest green candle in the history of Bitcoin. So back-to-back days. And in addition to that, and I've shown this, but I just want to reiterate, if I add the volume to this chart, I actually have to move the chart because you can see on these 2 back-to-back days, this is daily volume. These were off the charts. I mean, these were just drastically more volume than even high volume days. It was double the high volume days. So that's exactly what capitulation looks like. I'll add the obvious caveat. There are no guarantees in this lifetime. We could go from bad to worse geopolitically, other things could happen, but all other things being equal, black swan events aside, this seemed like an unbelievably obvious bottom to me. Now, we've run all the way up to my only really line of resistance. I have a gigantic gap, and so does, everyone's chart's going to have a gap. I don't really have any significant lines from this $74,000 up to almost 90 grand. We just don't spend a lot of time in the middle of those, particularly between 74,000 and 80,000. You could count on your fingers the number of days we've closed a daily candle in the history of Bitcoin between those numbers, even though we've been as high as $126,000. So I do think at some point we're going to gap back up over 80. That's my opinion. Maybe it won't be this run. You can see this is very effective resistance. We ran right into it on March 4th. It's now March 13th. We candle wicked right exactly up to it again and pulled back. This is 1, 2, 3, 4, 5 green candles in a row. Having said that, if you look at the one-day RSI, we are at 54. We're just ever so marginally above neutral on the daily RSI, which means there's more than enough room for Bitcoin to run to 80,000. Doesn't mean it's going to happen. Doesn't mean it's guaranteed. But I do think you're going to see it doesn't spend at this spot where it's at. It doesn't spend any time there. It's either going to go up or go down. So, and the weekends are hard to judge by because big money isn't really in on the weekends. So you're going to trickle one way or the other. We're going to find out Monday morning, unless something major happens. And Sour Melon Gaming saying we definitely won't be over 75K at the end of March. See, I feel like that's a bold statement because we were at 74,000 today. We were at 74,000. If I look at this daily candle, 73,968. So it's a fair prediction to make, but it's hardly a wild prediction to say we're going to hit 75 or points higher when we were at 74 today. We'll see. We've gone through a lot of uncertain things. We've gone through a lot of what people are calling bad data points. I don't think they're bad data points. Speaking of which, let's talk about this week's bigger number, more important number in most people's opinion, CPI. January last month came in at 2.4. This new number that just came in, 2.4. So let's look at what were we expecting. Consensus was that we were going to be at 2.4. Previous month, we were at 2.4. Actual, 2.4. So for all of the Fed's table pounding and the market's tantrums that inflation is the problem, we're now more than 2.5 years into normalized inflation. Now, prices still stink on a lot of things because we had a year in the middle where we had 9% inflation. So, yes, goods are expensive. Cost of living is difficult. Wages have not kept up with inflation, and most specifically in the year where it was at 9%. So I get it. I feel it the same as you guys do. But the reality is, if you're asking the question, which one is the bigger problem right now? And remember, the Fed has a dual mandate. They look to keep inflation low and unemployment low. The job market's been on the downturn. We're like 14 months into the job market slipping and slipping and slipping. We lost jobs last month. So you were going from a situation where we were adding 500,000 jobs a month to a situation where we lost jobs last month. So it's very difficult for me to understand somebody arguing the point that out of the two concerns, right now inflation is clearly a bigger concern. There's no rational way that anybody could argue that. If your argument is that, well, despite the fact that we're 30 months into normal inflation, I think next month is going to be a disaster because of XYZ. The first thing I'll caution you is they've been saying that for 30 months and it hasn't happened. Oh, but this month's different because of this. Oh, but it's Liberation Day and everybody's got 1,000,000% tariffs and inflation's going to spiral. That was almost a year ago. It didn't happen. So they're not going to lower interest rates at this meeting, right? If we go take a look, there's a meeting on March 18th. That's next week. The probability that they do not lower rates is 99.1%. This is the CME Fed Watch tool. So that is what the market is building in as a probability, meaning effectively, less than 1% chance they're going to lower rates. They will not lower rates. The market's built it in. It's what's expected. So what we're going to get on the 18th is some movement based on what Jerome Powell says. If history is any indicator, Jerome Powell rather prefers to tank the market. That's his go-to move. If you don't want to take my word for it, go look it up. Now, there's a few exceptions to that. There's been a few days where we actually got some talking points that were a surprise to the upside. But in general, his talking points are fairly consistent. They lean hawkish in general, and Jerome Powell's not lowering rates. So this is his meeting on March 18th. This is his meeting on April 29th. You can see the market's already built in a 95% chance of no rate cut. Jerome Powell's not lowering rates. He made that clear a long time ago. It could be the end of the world, and he will not lower rates. So that's what is. And the market knows it.
And Tom, that statement is very apropos. It could be the end of the world. No truer statement has been made during the stream today.
And if it is, there's a 95% chance Jerome Powell will not lower rates. And the only thing I object to about that is it's actually 100% chance, and we all know it. Now, in June, we have a new Fed chair. The market's now pricing in a 76% chance we don't get a rate cut in June. These two, March, we're not getting a rate cut. April, we are not getting a rate cut. Those are reality. This is FUD. This is FUD. I think it is highly likely we get a rate cut in June. Highly likely. And July. And September. And October. And December. So that's my prediction. 1, 2, 3, 4, 5. 25 basis point rate cuts is 1.25. I think it's equally possible we will get 1.0. That's the range that I think we're looking in, somewhere between 1.0 and 1.25. Now, if they do a 50 basis point rate cut, they may skip a meeting somewhere in the middle. We'll see from a strategy standpoint what makes the most sense for them. But that's my opinion. The market doesn't have that priced in. The market strenuously disagrees with my June opinion. They think there's a 76% chance we're not getting a rate cut. But pay attention, there is a 1% chance we're getting a 50 basis point rate cut or 225s by then. So we'll see. Again, until we get there, we don't know. Everybody's, including myself, I'm just speculating. But I'm telling you what I firmly believe and how I'm going about investing. I think we're going to get a rate cut in June and not before. I think there's no chance before, and it's highly likely in June. And when you look at CPI data like this, I mean, here, let me go to I'm going to show you what I mean.
As you do that, Tom, almost 75%, 60-30. Yes, almost 75% believe Bitcoin's going up.
Very nice. That's an encouraging poll. Almost 30% think it's going to get over 80. But we do have, it looks like under 60, still at 20%. So the consensus is that we're going up. But it's not like it was a landslide. So a lot of uncertainty in all of our polls. Nothing got a majority. But that's interesting. And I think by March 31st, that's a short time frame. I'm very tempted to say 80K or more, only because I believe that we are going to spend very few days between 73,000 and 80,000. So we're either, if we get to 75, I think we're going to get to 80. So to me, it's kind of one way or the other. So picking 75 for me kind of is picking 80. And I think there's a good chance of that, but we'll see. Again, this very hard. That's a super short time frame. Now let's see what people think by the end of the year, George. Where is this year going?
Oh man, I'll tell you what, I think I've changed that mind.
Well, let's give us our choices and we'll see.
Let's go.
So to put things in perspective, right, this is when we had an inflation problem. It peaked in June of 2022 at 9.1% CPI. There's a lot of different ways to measure inflation. In reality, in my opinion, the grocery store tells us that all the numbers are actually much higher than any of these numbers, but versus each other, they're apples to apples. So you can see this started 5% in May of 2021. If I go to the 10-year, right, 2.5%, 2.9%, those were the highs. So some 2.7%, 2.8, 2.5, 2.2. So that's the high end. The low end, 1.6, 1.8, 1.7. So over the last 30, actually I think it's the last 50 years, the average CPI has been around 3.5%. Our target's 2%. We've had times that it's lower. If I go to the, I think it's going to let me go to the max chart anymore. So we have here. Well, this does not count. We know April and May of 2020, there was a certain event that you're not allowed to say on the internet that occurred that caused dramatic decrease in this. So these numbers are outliers. I would take them with a grain of salt. But we have had times in the past where we've been even under 1% on this. So it can happen, but you can see 2.5% is basically normal. So we went from 9.1%. In 2023, we were still kind of 3.7, 3.7. That's obviously dramatically better than 9.1, but still, that's on top of the 9.1. So none of that feels good. But we got down to 3 in June of 2024. We're now in March of 2026. That's a long time ago. We have not been above 3 in over 2 years. So we've been between a low of 2.3. By the way, we're at 2.4 right now. A low of 2.3 and a high of 3 for the last almost 2.5 full years. By the way, all of which time everybody's been screaming, inflation's our number one problem. Inflation's going to spiral out of control. Well, the reality is it may going forward, but those people who said that right here, they're already wrong because it's now 2 years later and it didn't happen. So I'm not saying we're never going to have inflation ever again in the history of time going forward. You can't say, well, I'm right because 15 years from now we had inflation. No, inflation was allegedly the imminent disaster, and it didn't happen. We're at 2.4 right now. We have 1 month where the government was shut down, so we don't even know what it was that month. We get no number. So my point is, while we're doing this, we're losing jobs. Enough with that rant. Our next poll should be and see if you guys think I'm out of my mind on this inflation versus jobs thing. Which one is the bigger potential problem right now? And really, from the way the Fed works, their tool is to raise or lower interest rates. Their other tool is their talking points after the meeting, right? To be, if they talk very hawkish and focus on one or the other, then that becomes the prevailing concern. So what's the bigger concern right now? So we'll let this poll play out. And then I think we should ask you guys, what do you think for the next 12 months is a bigger concern? The jobs market or inflation? And I understand right now, taking into account other things have happened geopolitically. Maybe you think that even though we're 2.5 years into being in a good place on inflation, that's going to slip away. We'll see, but it will be interesting to see what everybody thinks. I think we've had event after event, right? The sky was falling. April 8th, the stock market tanked. The VIX, I'm going to go show you this. This is how bad things were. On April 8th, here, it was April 7th. Friday was the 4th. So you can see before whatever tariff day was called, before Trump announced tariffs, we were down. This is the volatility index, the VIX. We were down at a very, very normal 22. 35, I have always had a line on this. 35 is panic. That's my line. There's other lines that are relevant, but 35 is when the market is in a panic. We very, very rarely, and I'm going to go back in time and show you, very rarely get over 35. In inflation or in tariff, on tariff day, we got up to 60. Severe mass. This was the second or third worst day in the history of the VIX. And from this level of panic, we got no inflation. Right? It's a year later now. So, we don't have to guess what happened over the next year. We had normal inflation for the 11 months that have passed since this time. Now, we actually had an even higher number back in August of 2024. The market tanked, Bitcoin tanked. We got up to 65 on the VIX. But as I go back in time, you're going to see this is wildly unusual. This goes all the way back to 2021. You can see things are spiking. We had a period of time where we were spiking up to that 35, but it was basically holding, candle wicking back down, other than one day finished above that. Then if I go further back in time, we have the mother of all events, March of 2020. Not allowed to say what it was. But you all know what happened in March of 2020. We reached 85 on the VIX, the biggest panic period in the history of the VIX. And So you can see in between there, you got to go back to 2018. We got over 35. Then you got to go back to 2015. This is usually once every 2 or 3 years the market panics and gets to this 35 number. So we actually hit that last week. And it held. So are we going to push higher than this? It's possible we'll run back up. It depends probably mostly on geopolitical things. You know, if all of a sudden oil's $160 a barrel, guess what? We're going to break through 35 on the VIX. But historically, if you look back, every single time we get one of these are the best times in the history of the stock market to buy stocks as a general rule. So not financial advice. You got to, I mean, the other side of that is this is the most panic the market's ever experienced. But we know the inverse correlation there.
Tom, this poll is really impressive.
It's all over the place.
That's good. It's nice to see. More people are bullish.
Yeah, it's skewing to the higher end. That is very good.
That's awesome, man. That makes me feel good. That and $5, maybe I can get a cup of coffee at Starbucks.
Well, I was going to say only not if you go to Starbucks, but maybe somewhere else. Okay, here. So while this poll is going on, let's take a look at some FUD that's floating around out there. Bitcoin could face deeper downside as odds of a U.S. market meltdown rise to 35%. This was March 9th. That was, I think, Monday. Ed Yardeni raised his probability of a stock market crash this year as oil tops $100. The dollar posts its best week in a year, and the Iran conflict expands to Saudi Arabia. So, with that said, oil got up to almost $120. It got over $100 again. The dollar, I want to take a look at this real quick and then come back to this article. This up here somewhere, I think. I don't, so I gotta bring this up. Look at the DXY. So we haven't talked about this in a while, but this is supposed to be an inverse relationship to Bitcoin. The stronger the dollar is, the worse it is for Bitcoin. The weaker the dollar is, the better it is for Bitcoin. You can see, you got to go all the way back to August of 2025. The last time the dollar, well, it wasn't. You got to go back to here, this day, May 29th, 2025 is the last time the dollar was this strong on the DXY. So the dollar has been going up in pretty much a straight line. This should be bad news for Bitcoin, but it has not been. So there is a trend reversal. That's why I'm saying I believe we bottomed out. Because at a time where all the macro things are saying Bitcoin should be doing poorly, if we look at what Bitcoin's doing, this is 5 green days in a row. This is this is more than a month of bottoming out and never even getting near this number again. Doesn't mean it can't happen. Listen, I'm not going to fall out of my chair if we bounce off a 60 again for some reason. We all know how Bitcoin works.
Yeah, well, okay, what was I talking about? Since you can read lips. It's a good conversation.
And Ethan is saying, yes, it's unbelievable how Bitcoin is doing considering the dollar is pumping so hard. Right, the dollar is pumping, oil's at $100. I mean, this would have been a time in the past where we would have seen bad things from Bitcoin, and we're just not. it's outperforming the market, and it hasn't done that in a long time. So I think that it's out ahead of the market. It underperformed the market for a considerable period of time. I think we had what is this round's version of our crypto winter. I think it's almost over. I know a lot of people are going to disagree with that, but I said before we ever got to this halving that I don't think we're having a crypto winter the way we have in the past ever again. It was my opinion that a 40 to 45% pullback would be the bottom of the crypto winter. Now, to be fair, it got worse than that. We got a 52% pullback. But I think that was it. And previous crypto winners have been 75 or 6%, 80 something percent. One was 85% pullback. So 75% pullback is the best crypto winner we've ever had. This time, I think it was 52%. Next time, I think it'll be even less than that. I just think there's too much money. This is the first cycle we've ever actually had any adoption. More money's come into Bitcoin in this 4-year cycle than in all of Bitcoin's history put together, and it's not close. So, having said that, while we have our first couple of rounds of Bitcoin adoption, almost all the money's still on the sidelines. So to me, there's no reason to believe that Bitcoin's not going to do the thing that we thought it was all going to do. Oh, and Ethan's talking about the 2008 crisis. So let's get back to the VIX and see, because I thought I remembered like 130 or something. Let's go back and correct the record. The VIX go. Bring it up. So I'm going to go to the 1 week. We can go back and look because that was remember the 2008 financial crisis is when things were, that was the big disaster. So let's go back and so even in 2008, I mean, it did get a little bit higher. It got to 90. I thought it was even worse than that. So there's two panics in the history of this thing. Two ultra severe panics. The 2008 financial crisis and the March 2020 thing that happened. And I'm going all the way back here to 1990, and you can see, like, that's it. This green line is just the halving. So you can ignore that. So thank you, Ethan. It actually did get even a little bit higher in the 2008, literally what they called the financial crisis. By the way, on that day, the Federal Reserve had to open the window and tell all the banks, we have infinite money. You can come get as much as you want, because all of the bank stocks were heading towards zero. They were all down 80, 90, 95%. We were 1 day away from a complete run on every single bank in the United States. So, for those that think the Federal Reserve has no use, which most of the time I kind of think is true, they did actually open the window and come in and pretty much prevent the end of the financial world in 2008. We had never been to that point before, and let's hope we never get back. And there's safeguards in place that are supposed to avoid things like that, but nothing's perfect.
Some of us would say, Tom, that they caused it.
Well, right. You're right.
They caused that meltdown.
That's true, right? That was the boiling point. That was the tipping point.
I think it's just, I don't know. I won't. I'll say nothing. It's probably better that way.
Ethan saying, I remember AIG at 35 cents. Right. I'm telling you, these were all considered penny stocks for 1 or 2 or 3 days. I'm talking about the Bank of America, Citibank. Let's just take a quick sidetrack.
Yeah, Citibank. Oh.
That chart.
And it's still.
That is definitely not. They've gone through a change. Obviously, this is not the correct. Oh, gotta go. All right. Well, let's pick something different. Wells Fargo. Those of you outside the United States, these are the biggest banks. Wells Fargo and the Bank of America, they're the biggest banks in the United States. There are other financial institutions that are even larger than that. So this goes all the way back to the 90s where this Wells Fargo was a dollar stock, but then it went from a $44 stock. On this chart, it says it got down to $8. So, in a very brief period of time, this was down 81%, but that's got to be the best one. Yeah. So look at the Bank of America. This thing was a $55 stock. And it got down to, and I'm looking at this spot right here. I'm just getting off of it so you can see. It was down 96%. The stock was trading at $2 and change from $55. This day, and let's add the volume. Right? On off the charts volume, historic epic, the most volume in the history of the Bank of America stock. This was one day from going out of business. This was the Federal Reserve opening up the window and saying, if you need $1 trillion, you can have it. That's what happened. So for those of you not old enough to remember that, a lot of you probably remember it well. We have not seen the likes of this before or since, and may we never see it again. So, and that was the all-time high on the VIX. What's the point of that? Not to revisit. Those were not happy investing days. And again, just right here, during this time, the Dow was at $6,700. We've hit 50,000 from there. Right, it's crazy. If we look at the Qs on the 1 month time frame, they're so high you can't even. Right, this is the dip. It doesn't even look. We're so high. This doesn't even look like a dip. Let me get rid of the volume. And I want to go look at one other thing that I think is important. So obviously, back in the day, in March of 2000, we had a tech bubble. The Qs were at $120. Their normal trading range got down to around $50, you can see here. And if we go to the bottom of this, it was $25. So that's a 50% pullback in the NASDAQ. That's catastrophic. Since then, we've only had, if you had invested during the financial crisis and just said, I'll just invest in the NASDAQ and leave everything else alone, you'd be up 3,400% right now. Now, it's a long time ago. That was 18 years ago. But 3,400%? The stock market has been very good to people for the last 18 years. I want to look at...
That's a good poll. Do you think the next 18 years is going to be the same return as the previous 18 years? Taking this poll down, putting it up.
We have... Robert is pointing out we have more people watching than we have likes. Yes, if you could do us a favor and smash the like button. It's free. It helps the stream a lot. And listen, everybody's pretty bummed out right now. So let's smash the like button. There's good thing. I think there's good things ahead. I know there's a lot of uncertainty ahead and there's some rough times, but I think there's good things ahead. I think there's reason to be optimistic on a longer term. So that last, and it looks like you guys are, because Bitcoin by the end of the year, in first place, 120,000 at 40%.
What is the NASDAQ? How do you spell NASDAQ? I don't know.
Here, the NASDAQ is the Qs, but if
the Qs?
That's the, well, and they're not here. If you want to see the actual NASDAQ itself, it's at 22,000.
So,
and
I'll give options. So 22,000.
Oh, you're going to do the market.
Yeah, the market. Yeah. I'm just trying to put the right symbol down. I don't want to put the wrong symbol down. So the S&P 500?
No, the NASDAQ is not the S&P 500. It's the NASDAQ 100. Right.
I just wanted to put the right thing.
You can put the Qs or the SPY.
No, I just put, it's just yes or no. It's not going to be complicated.
But you can see we're just off of, I mean, in 2015, the NASDAQ was 4,000. It's 22,000 right now.
This is going to be interesting to think of what people think long-term of the United States. By the way.
Yeah, so are we going to get another 18-year run like the last? And we had our dips. Right? Look at this. Look at this giant dip in the NASDAQ. It will go.
I'm not doing that one where Bitcoin crashed the banks. I'm not going to do that. I really think you should add, the question should be, will stable coins, if they get a yield, crash the banks? That's probably more accurate when you say, Tom.
Well, that's the bank's competition is stable coins. Now, some people think on a 25-year time frame or a 50-year time frame, and I have an article somewhere up here that talks about this, that they think that Bitcoin is going to be the global currency and that will replace the US dollar. And I really don't believe that. And I'm a gigantic Bitcoin fan.
Interesting, Tom.
What? The results here?
Yeah. No, what you just said.
Oh.
About Bitcoin. You're not a Maximus. Look at that. Overwhelmingly no.
I think Bitcoin is going to do everything people said it was going to do. I think it's going to be in the millions. And the people that buy and hold Bitcoin are going to acquire extreme wealth. I don't think it's going to replace the US dollar.
Let me run. I'll see you guys. My wife, her parents are in the hospital and it's not been looking good. So I will see you guys later.
All right, George. Thanks. Have a great weekend. So in 2022, the Qs did have a 37% pullback. That's a vicious bear market. So it does happen. Everything's not in a straight line. And you can see we had a V-shaped recovery in 2025. Sure you guys remember this just happened. That was a 25% pullback in a few months. This is the 1 month, so we're zoomed way out there. Let's see. I just want to see some other. let's talk about the Bitcoin miners, because we didn't really get to, there was some Bitcoin miner news, nothing earth shattering. Bitfarms expands leadership team with seasoned U.S. industry experts to support high-performance computing / AI infrastructure development. This was, again, on Monday. So this goes through a couple of things are going on with Bitfarms. It's why I have held all of my Bitfarms way back when Bitfarms got, well, it wasn't way back. I'll show you. We go to Bitfarms. In April of 2025, and then again in June of 2025, Bitfarms got down to 67 cents. I bought some options, and by some, I bought a lot of options. It's probably the heaviest I've ever gone into options, because they were essentially giving away $1 options for Bitfarms. And I was fairly confident it was going to get back to $1. So it did a lot more than get back to $1. It got to $6.60. Right now it's pulled back. It's had a big pullback since then, but it's still over $2. And it's really maintained that all along. And when my options expired, it was somewhere in here, just under $3. So I got to buy Bitcoin for, $1 when it was at $3, effectively, with those options. And they cost me almost nothing. So I converted them all, and I've held all my Bitfarms, and I'm still holding it because this announcement, if we go back to it, this is part of a larger picture. They are changing their domicile to the United States. They are going to be a U.S. company. In addition to being a U.S. company, virtually all of their operations are in the United States. So Hive did this a few years ago. They changed their domicile to a U.S., became a U.S. company. They did a reverse stock split, and they thought if we could be a U.S. company and we could be over $5 a share, everybody's going to buy our stuff. The thing was, they didn't actually conduct any business in the United States. And the market did not like that. All of the mutual funds and retirement funds and all those other things, they didn't really buy the Hive maneuver. Bitfarms is trying the same thing, except they are full force moving into the U.S. They're not just changing their domicile. The vast majority of their operations are in the U.S. They're hiring all these people here, and we're, I think, weeks away from this deal finalizing and having them become a U.S. company. They will be changing their name to, I think, Keel. So, all these years with Bitfarms, I've had Bitfarms for a long time. They won't be Bitfarms anymore, but they'll always be Bitfarms to me. So you can see, I'm not going to go through one by one all the people they added, but what I do want to show you is Bitfarms' 2.1 gigawatts of North American energy portfolio is comprised of energized, underdeveloped, and pipeline megawatt. Not underdeveloped, under development. So either already done and energized, under development, or some of it's just pipeline in that they have an energy deal and exclusive rights to the land. Some of them, they may hold the land and have an energy deal, but they're not actually developing it yet. 2.1 gigawatts. For those of you that have been paying attention to this channel, 2 gigawatts is my number. Though the companies that I think are going to be serious players in the data center business need 2 gigawatts to put them on the map. And Bitfarms has now gotten themselves to 2.1 gigawatts. And there's a lot of the companies that we have talked about that are bunched up in this 2 gigawatt area. Some are a pipeline out to 3 gigawatts. We saw IREN has a pipeline out to 4.5 gigawatts. I'm going to show you what Hut 8 is claiming, but I personally am discounting their number, and you'll see why. But to me, this is the most important part of this. They're moving all their operations. They're moving their domicile to the United States. They're moving their operations to, and you may say, well, who cares? What's so great about the United States? It's got nothing to do other than the United States has the 2 biggest markets in the New York Stock Exchange and the NASDAQ. This is where the money is. So if you want the money to come into your companies, you know, this is where it is. And a lot of the money that has not even begun to move into cryptocurrency is in hedge funds, investment funds, retirement funds. And a lot of those funds, they will not trade a stock that is not domiciled in the US and that is not $5 or more. Those are 2 criteria. They may sound arbitrary. It is what it is. These are old rules. They linger in a lot of companies. So I think Bitfarms is headed towards being a $5 plus company and gaining a lot of adoption. That's what I think. Now, if they fail to execute on their plan, that's not going to happen. But I think they've made a major shift. They will not be a Bitcoin mining company at the next halving. They've moved away from Bitcoin mining, and they're expanding their pipeline of energy. They want to be a data center company. They want in on this high performance computing, AI, energy stuff. It is the bottleneck of AI, period. It's the nightmare that all of the AI companies are looking at, is where are we going to get our power and our data centers? So I think we are at the beginning of that, not the end, in my opinion. So, and that's not to say that I'm not still holding on to a lot of these for their Bitcoin mining, because I do think Bitcoin's going to have its run, and those companies that are 50 or 60 or 70 exahash that are mining a lot of Bitcoin, that are holding a lot of Bitcoin, they're going to get a run up from the Bitcoin activity. They're going to get a run up from the high performance computing activity. And that's why I think there's a lot of upside on these stocks. But that's just, that's why I'm still in these companies. And that has evolved over time. And let's see, do you think the returns will be the same for the next 18 years for the NASDAQ? So almost overwhelmingly no. I mean, the returns were so unbelievable over the last 18 years. It is hard to imagine. The NASDAQ, let's put it this way. The NASDAQ could hit a grand slam home run and not be able to duplicate its results from the last 18 years. So I think your money is the S&P 500, the NASDAQ, even the Russell, I think will all be very solid investment over 10-year, 20-year, 30-year windows of time. But I'm not sure we're going to duplicate what we did in this 18 years. That is a really high bar. So 16% of you said yes. I hope you're right. The more, the better. So everybody wins. All right. So if we look at Bitcoin, it is over 70,000. We'll see if the daily candle closes any minute now, unless it already closed. We changed the times here, so I'm all confused, but we're somewhere near the daily candle close. We'll see if it closes over 70,000. It closed over 70,000 yesterday. We got a couple of weekend days that may not give us a lot of insight. I think it's going to be important to see what Bitcoin does at the open of the market on Monday. So, because when the equity markets open in the U.S., a lot of Bitcoin money comes in and is put to use, either buying or selling. So we'll see what happens. So I'll leave you with that thought. You can smash the like button on the way out if you could be so kind. I hope everybody has a great weekend. And to the members, I will see you guys on Tuesday. I have a bunch of stuff we didn't get to that I am going to save because there's a few other good things, but I'm already running long. So have a great weekend, everybody. Thanks again for watching. We're here every Friday when the market closes.